This is The Convergence.
Hi, everybody, and welcome back to another edition of The Convergence, where every episode we talk about the convergence of Web 3.0, climate change and sustainability, and how Web 3.0 is going to disrupt the world. I want to introduce you to my guest this week, Mike. We just recently met Michael Durso, and I think it was probably about 2 or 3 weeks ago we got introduced. And Michael is a founding partner, chief investment officer of Shorehaven Wealth in New Jersey. Is that right?
Correct. Yep.
Did I get it all right? Perfect. Yeah. Where at New Jersey, did you say?
So Red Bank, New Jersey. So central.
Okay, Red Bank, New Jersey. Nice. Yeah. Well, it's good to have you here, Michael. Last time we chatted, when we first got introduced, we talked a little bit about sort of, the traditional old, stocks and bonds mentality on investing, and how you've started to see, well, as we talked about beforehand, when Bitcoin was $60,000, you had lots of people asking how they got in it. Now that it's $20,000, everybody is sort of questioning it. But let's talk a little bit about investment strategy and what you're sort of seeing in the marketplace. I'd love for you to talk about, is it still a valid place to make investments? Just in general, let's just sort of chat about this. You're managing money for private individuals, right?
Yep.
And they have a portfolio with you, and I'm assuming that's got stocks and bonds and all the traditional sort of things. When did you start getting into this crypto side of things and start to get a better understanding of how Bitcoin and blockchain worked?
Yeah, so it's interesting. I wish I got into a little earlier than I did. Actually, a couple of buddies of mine, I used to work in asset management at BlackRock. And so, a lot of the traditional finance world, and two buddies of mine left BlackRock in 2014 to go work in Bitcoin back then. I had a conversation with them about it. I did nothing about it. I wish I did, looking back on it now. But early on, I'd say I started investing personally in Bitcoin probably 2016.
Okay.
2017.
It's a good time.
2017 when the market really spiked up to around 18,000 was when we started to hear from clients about it. But at the time, I was working at one of the large wirehouses, and on the bank side, on the banking business, they have no interest in talking about cryptocurrency, obviously, right. Especially in 2017. And so, Shorehaven Wealth Partners, our firm, we launched in July of 2020. And one of the reasons we launched the firm, being an independent financial management business, was to give us the ability to do what we felt was best for our clients and maintain that fiduciary standard. And one of the things I was really excited about was the ability to invest in those non-traditional asset classes. So, like you mentioned, we run model portfolios for clients. We have about 360 million under management right now after the most recent market correction. A lot of that is in ETF models, traditional stocks, bonds, growth income portfolios. But one of the things that we have started to look at for clients is digital assets, specifically Bitcoin and Ethereum. And the reason that we've done that is because I think there's a pretty asymmetric situation going on with digital assets, specifically Bitcoin and Ethereum. I think that a small portion in your portfolio, let's say 1 or 2%, even up to 5% of a portfolio, although there is that volatility in the portfolio, when you see years like last year where Bitcoin's up 59%, you have a 2% exposure in your portfolio, you're adding over 1% returns to a portfolio with a 2% exposure, which is hard to get in the traditional asset space.
That's a great point. And I think the future, and let's be honest, I think what's happened in the crypto markets right now, there's lots of reasons for that. And as we talked about a little bit before the show, some of that is, I think people thought that Bitcoin and Ethereum would operate separately from the markets. The invisible hand of the market disagreed wholeheartedly with that and did what it does. I'm sorry, I just had to make that point, that I think there is this sort of challenge that people are looking at it right now and saying, wow, what a great year last year. But if you had been in a couple of years ago, you're still having a great time.
Of course. Yeah. The long-term numbers are all phenomenal, obviously.
Yeah.
And I think that, sometimes when you get on with some of the Bitcoin maxis and the people who are, Bitcoin or nothing else, they really like to throw those long-term correlation numbers out there and long-term return numbers. I try not to get too caught up in that because I think that obviously, the correlations were not strong in the past, but everything we've seen recently is that Bitcoin is a risk asset, right? So if there's going to be a sell-off in growth stocks, if there's going to be a risk-off trade on, Bitcoin's going to, participate in that. And I think more so, some of the benefits of Bitcoin can also be a detriment when it comes to the risk trading because, 24-hour trading, 7 days a week, right? So if you're a fund and you want to get some risk off over the weekend or overnight, it's a pretty efficient way to do it is by, shorting or selling Bitcoin. So I don't see that as a bad thing. I think that's kind of the benefits of it. And one of the things that we also talked about is I think that a lot of the problems that you saw in traditional finance in, 1999 in the web bubble, some of the things we saw in the savings and loan crisis, a lot of that stuff is flushing itself out through the digital asset ecosystem, which I think is great, right? I think that anytime you have people who are looking at something and thinking they can get, it goes back to there's no free lunch, right? So if someone's telling you can have something that's dollar stable, but it pays a 7% yield, you need to really think about what you're buying, right? Because while yields are paying 50 basis points and you're getting 7% and you're told it's dollar stable, you got to ask some more questions there. And I think that's the type of stuff that gets caught up with Bitcoin and Ethereum, where people just say, this is a fad or this is another bubble, because they're not thinking about the technology behind it and the utility. They're just thinking about it as a speculative asset class. And once you get away from that, I think the entire digital asset space will be better for it years to come. Once you flush out a lot of that speculative trading type behavior that sits there with a lot of those meme coins and a lot of the things that we were seeing the past few years.
Well, let's be honest too. Similar to the .com crash in the 90s, that wasn't the end of .coms. That was actually the beginning of .coms. What happened was anybody who was a utility, anybody that had a valid play in the space, thrived on the back end of it. Yeah, they took their hits in the front, but they survived and came out the other side stronger and better. And the companies that were the meme coins of the 90s, and there were lots of them. I have friends that can show me on paper, days in the 90s where they were worth $100 million. And during the .com bubble, they went to zero overnight. So that wasn't real to begin with. And I think that's the difference, particularly when you talk about Bitcoin and Ethereum, from all that I've learned through this show, is it's not a meme coin. These are utility. These are the undercurrent. These are the liquidity pools for token sales. They are written into contracts as the methodology of how those DAOs are going to pay out, or those blockchain contracts are going to pay out over 10, 15, or 20 years. These things aren't going away. It's just that the market conditions around all of these other meme coins and their crashing had an effect on those assets as well, just because the whole market was down. I would say the same thing about real estate. People ask me all the time, they're like, don't you think it's a flash in the pan? I'm like, sort of like the 2008 crash in real estate. Nobody's ever bought or built a house since, right? And they're like, well, no, everybody's still, so it wasn't a wipeout then. Because I thought you just said that this was all, and they go, yeah, I guess that's true. All it did was take all of the weak out of the market and allowed the strong, and on the backside, the strong will come out stronger. I truly believe that's the case.
Yeah, I do too. And I think a lot of it comes down to, we've been kind of lulled into these boom bust cycles, right? You look at what's happened with money coming into the system and government stimulus and, this perfect combination of people sitting at home trading stocks all day, trading crypto all day, extra cash in the bank account. And all of that kind of lulls you into this scenario where people see things in booms and busts. It doesn't always need to be that way, right? We can trade in sideways markets. We can have 18 months of a gradual up, 18 months of a gradual down. Things can be choppy. I just think that we've kind of gotten away from that in all markets. And I think crypto is no stranger to that as well. And that's something where I think that the more people start to understand that, these markets are very similar to the traditional markets. And we've seen this before, right? You mentioned the tech companies, right? You look at Amazon. People want to talk about Amazon now, but go back and look at some charts on Amazon and look at the peaks and valleys of an Amazon chart from 2000 to now. Overlay it with Bitcoin, it will look very similar. You're going to see some very big drawdowns. you have to be able to stomach that. And I think for me, in my role of talking to clients and trying to get them to understand how volatility plays in a portfolio and how you need to be thinking about your investments, that's the first conversation I have. I need clients to understand that they have to have a stomach for this type of risk if you're going to put this in your portfolio. Because if you're going to put it in your portfolio, there's going to be years like last year where you're up 60%, and there's going to be years like this year where you're down 50 or 60% by July. I don't think it will always be that way, but I think right now, the nature of the asset class is that it's a volatile asset class. And that's good.
You can't have absolutely. And you can't have an entire economic system built on, Keynes and the Keynesian philosophy of economics and expect assets not to work in that. If the rest of the market is built on this idea of the boom and bust, I'm sorry, you're not going to find that protection that, someplace else. I mean, it's just not going to happen. I mean, I think you can even look at gold as an asset. You would have assumed that gold would be through the roof right now. I mean, that's the only one but it's not really seeing those fluctuations for I think for a lot of different reasons. But yeah, please continue. I think there's a lot to learn here.
No, and I think if you think about it just from a traditional market standpoint, right? We think about it as a long-term investment, right? So for us, I try to really get people out of that trading mentality, because do I believe that Bitcoin and Ethereum will be around for the long term? 100% I do. Sure. Do I know if Bitcoin's going to touch 10,000 this year and Ethereum's going to touch 500, or if it's going to touch 40,000 or 2,000? I have no idea. And it's not my place to make those decisions for clients. What my job is to make sure that we're, cognizant of our clients' risk and building something that's going to benefit them for the long term. And that's where I think, Bitcoin and Ethereum can be additive to a portfolio. The other thing that's really interesting, and a lot of people don't talk about with regards to Bitcoin and Ethereum, is the fact that they're taxed as collectibles, right? They're not taxed as investment securities. And so if you are in a taxable account, there is a benefit to the volatility where you can harvest losses in the portfolio and not have to worry about those 30-day wash sale rules that you have to worry about on traditional securities. And
I didn't even think about that, to be honest with you.
Yeah, it's enormous. I mean, it was something that they're definitely looking at. I don't want to say it's going to be around forever.
Right.
I know the Biden administration was looking at it. There was talks of it being in the Build Back Better, I believe.
I remember that. Yeah, the Build Back Better. Yeah.
Kind of on the back end of it, but it didn't go through this year. So for this year, at least, on your taxes, right? If you owned Bitcoin at a higher cost basis or Ethereum at a higher cost basis, you can harvest those losses and buy it back immediately without a wash sale. And, with people having real estate gains and equity gains in their portfolios, there's potential to offset those losses if you want to rebalance the equity side of your portfolio. So,
but I'm actually literally pulling my Coinbase account up in the other browser right now, because I hadn't really thought about the fact that I bought a lot of these assets high and they're sitting at record lows right now. And I'm thinking it's a hold, right? You're right. Yeah. I mean, I need to talk to my tax advisor after this call and say, should I sell those assets, rebuy them at the newer price, and pass those losses on to my taxes this year? Yeah,
and I am certainly not going to. I want to make it 100% clear. I'm not a tax advisor, right? I'm not.
That's why I'm going to call mine.
I want to make sure that is abundantly clear.
Likewise, we are not giving you investment advice in any way, shape, or form, or telling you to sweep your account today and buy back tomorrow. We're not saying that. We're just saying I'm sure as hell calling my tax guy as soon as I get off the phone.
It's something that is a feature of the asset class, right? It's taxed as a collectible, and with collectibles, there's no wash sale right now. So, it's nothing illegal. It's within the tax code, but it is a benefit to the volatility of the asset class. And so, if you are experiencing this volatility and you believe in it long term, well, then why not take advantage of volatility and lower your cost base?
So, I want to talk with you for a few moments about Evergreen Carbon Credits, one of the sponsors of this show. I started working with Evergreen when I was telling a friend of mine who's involved with that company about my efforts to try to learn more about blockchain, NFTs, crypto, all the things in this space. And he showed me Evergreen. Evergreen was a really unique solution. I've looked at carbon credits in the past. I've been in the sustainability industry for almost 15 years. I understood what they were. You were buying an offset to offset the carbon footprint that you or your company has. But I also understood the challenges with that. they're sold in very, very large blocks. And then people break those blocks up and try to sell individual credits or small clusters of credits to businesses. And that creates some room for fraud, for people to not be up and up on what that project is, if that carbon credit is real. And there's, challenges with that. And you can Google it right now and find there's a big case in Europe going on about fraudulent carbon credits. But what Evergreen did, I thought, was really unique. They took this idea of NFTs and they took blocks of carbon credits and broke those things down into tens of thousands or even millions of individual carbon credits. They can actually fraction those even out to a tenth of a carbon credit if they needed to. And they were able to then create a smart contract around that carbon credit so that you can track it back to its origin. You can find out what project it was associated with, but you are also guaranteed that the carbon credits you're getting from Evergreen are the real deal. You get that certificate, you get that certification that only the blockchain can do. So that's why it made sense for them to come on as a sponsor of this show. We're talking about all this new technology, and with new technology comes higher energy usages in some senses. And Evergreen is here to help offset that. If you want to look to maybe improve your image in the marketplace, maybe you're looking to offset some of your carbon footprint, not even just for your image, but actually for the sake of the planet, head on over to evergreencarboncredits.com and check out what they do. You can buy credits for as little as $11, and you'll get the certificate and the NFT that you can put in your wallet that shows that you've actually made that contribution. And that money, particularly right now with the projects they're working on, is going to reforestation in the Amazon. I think that's something we can all really get behind, particularly when we understand that the environment, the climate we're all connected to it. It doesn't matter if we're putting off emissions here in the US or if it's happening in Mexico. It all contributes to the same global problem. So why not be part of a global solution with Evergreen carbon credits? I think the other thing is too, and Bitcoin is up a little today, 20,664. I think the other thing I was going to mention, particularly about Bitcoin, and I've talked about this a number of times in this show, is the fact that it is a finite resource. It is not a fiat currency in the sense that you can't just go print it on demand. The mining process, we had the Bits Be Trippin' guys on. That episode's probably coming out in the next week or so. These are the top Bitcoin mining voices in the world. And they're saying, look, 2040, there's a big Bitcoin's not going to be done mining until about 2140, but there's some things that happen in the next 15 years or so that will start making mining very, very much more difficult, and will change the supply side of Bitcoin. And I think that is one of those things that we put a lot of faith in the US dollar, but we see all this inflation right now. And I remember back when Trump was printing billions, trillions and trillions of dollars and sending checks out. And I'm saying to all my friends, you all know what this means, right? It means that the $100 in your bank account today is worth 95, tomorrow is worth 90. They're like, no, it's still worth 100. I'm like, your spending power has been significantly diminished. So the fact that this isn't, Bitcoin in particular, isn't something where somebody just goes and writes another line of code and says, let's make another billion of these. It doesn't happen.
Yeah, no, that's a great point. I think, from an inflation standpoint, that's one area where people have talked about, Bitcoin being that, inflation protection asset. And obviously it hasn't held up great during this time of inflation, but I think that a lot of it is those macro forces at play. And I think that when you look at some of the fundamentals of Bitcoin during this time frame, it's done well, right? You're looking at coin that's been taken off exchange, so it's being held for the long term. Look at number of wallets that are out there that people are holding are at all-time highs.
Wallets that people don't have access to anymore. I just want to put that in there too, because I believe the Bits Be Trippin' guys actually had an estimate of how many millions Bitcoin are never going to be seen again. They are.
I forget the number. It's a good amount.
It's a good amount. And I think if you think about it like a physical asset, if I had a large stack of dollars in the back here and it caught fire, the asset to me is no longer worth anything, but it's removed from the pool. And that, I think people aren't, they're underestimating. And then on top of that, things like Ethereum being used in the liquidity pool. And it's on the show, I'll get somebody on that talk about liquidity pools, but I'm working on a project right now where literally every dollar that's invested into that token, a large percentage, I believe it's about 30% of it, goes into essentially an escrow account that is used to back that token and say, this token does have value because we have a vault someplace where all of these Ethereum are stacked, if we want to get into the, thinking like of the mints. I think that's the cool thing about it too. Now, are you seeing in the investors that you're chatting with, there's an interest in crypto, and I understand why the interest in crypto is down now. Are you seeing interest in the token side of things as well, or just more in the listed currencies,
It comes up. It's something that we've talked about. I mean, sometimes, our younger clients who are definitely more involved in the crypto space or have a little bit more experience have asked about NFTs and some of the other things out there. We've had some conversations in regards to like yield staking strategies and ways that you can potentially, lock up in those liquidity pools. Nothing that we're doing from a client standpoint right now. Most of it for me is, I like to get very well versed on something and make sure that it's something I can be really comfortable with before we put it in client accounts. Yes. One of the things I really like about Bitcoin Ethereum is that we actually do it through a separately managed account manager. So we outsource that management to them. And so they're buying the coin directly for clients. So it's held in cold storage at Gemini. And they also do that tax loss harvesting for clients as well. Mm-hmm. So, although we're the advisor who's advising the purchase or speaking to a client about a purchase, they're the ones managing it. And so they are the ones who make sure that, with Gemini, cold storage, managing the tax structure on there, sending out tax reporting documents that you can provide to your accountant. And so really wanted to make sure that we had all of those things in place before we bring that to clients. And I think that although I think there's a lot of benefit on the token side, and I think there's a lot of benefit to NFTs, I think it's harder from a scalable business like ours to bring that to clients and really figure out how it fits in an overall asset allocation right now.
I don't disagree. I think tokens are more angel investors, and crypto is more traditional investors. And
it's a great way to put it.
And like I said, I'm on a project right now, and I'm making some purchases of a token, and there's good, exchange rates. There's a lot of things I'm looking at with those and saying, okay, I'm not going to dedicate a percentage of my portfolio to this, but I'm going to take a flyer. We used to call these back in the day when I was in tech companies, we used to call them rodeo investors. It's the guy that comes in and he's just there for the ride. And it's like, here's our financials. And he's like, I don't care, man, I'm in. It's like, I'm playing that role a little bit. And you have to be very cautious when you're not doing that out of your investment money. You're doing that out of, that cash you have in the safe or in that bank account that you're going, this is my sort of opportunistic, this isn't my 10X money, this is my 100X money. And I have to know that a lot of those are not going to come through. But it's been interesting to me to learn about the tokenization. I just did a recording yesterday with a company that is doing tokens to raise money for a mental health metaverse, where you can go in there and meditate, but you also could, through telemedicine, you could also have a mental health professional come in and chat with you. And I thought, wow, this is a really cool project. But it is that sort of tokenization piece and trying to understand it, understanding it's a little more like Kickstarter than it is, Fidelity. I mean, you're essentially buying something that you hope has value in the future, and there's the success of the company's tied to that. So they're much more risky, I would say.
I agree, and I think it's interesting because I think, Derrick, a lot of people get stuck on the word currency when it comes, and that's why I try to take digital assets a lot. Because I feel like when people are investing in tokens or any of these DeFi projects, I think they get stuck on that currency, and a lot of people will say to me, well, how am I going to spend this if it's a currency, right? It's a currency. I'm like, well, don't think about it that way. Think about it as investing in different projects and just a more modern way to invest in a private project, right? It's decentralizing the ability to, invest in something that could be the future in whatever industry it may be. It may be biotech, it may be mental health, it may be music, allowing you to have access that historically pretty much only went to the wealthiest of people, right? If you wanted access to a cool project that, somebody was doing and South Dakota. Who cares where it is, right? It would have been really hard to find that 10, 15 years ago. Now, there's a way to find that online. You can do your own research. You have the ability to participate. You have the ability to participate at a much smaller point of entry.
That's the great
tokenization of it. And so it's almost like you're getting more ability to find new things. And then the other point that you made, I think, is really interesting, is that I like to think about it as, let's not say gambling, but almost investing versus gambling money, right? Like if you're going to pick a bunch of these projects and you could build out a diversified portfolio of projects, your hope is that you're going to hit on, let's say, 2 out of 10 of them, right?
Yeah.
If you hit on 20% of them and they end up really well, you're probably going to end up break even or better on those 10 projects, right? Very different than if you gave me a portfolio of traditional assets or your retirement assets, and I said to you, all right, we're going to have a 20% hit rate on these. You're not going to feel really good about that. So I think that's a huge differentiator between the token and the NFT space, as opposed to looking at those more traditional, like investment vehicles like a Bitcoin or Ethereum, and using them in a portfolio from an asset allocation standpoint.
Yeah, I think you're right. I would go into that NFT a little bit too, and I realize that this isn't a part of the universe that you have with what you're advising clients on, but it's good to get your opinion as somebody who's looking at these asset classes and saying, there's potential here at some point for these to be something that gets added to a portfolio. But I like to talk about NFTs as well. And I say, the only NFTs I collect are from artists that make physical art in the real world.
Okay.
Justin Pierce is a good example, been on the show a couple of times. This is physical art that Justin Pierce made and I purchased at either auction or directly from the artist. He also has an NFT collection. Now, I collect some of those NFTs. Those NFTs are essentially membership into a club of collectors of Justin Pierce's, Jay Pierce's art. Now, some of us in the club own his physical art. Some of us don't. They're aspirational owners of his physical art because it is increasing in price and value to a point that it's becoming less attainable to the small art investor. But they're saying, I'm going to buy these NFTs. There is some exchange in value on OpenSea. Some of the ones that were bought early on are now worth a little bit more. Justin's done some very unique things, like say, if you hold one of these collections, my next collection, you'll get one for free. You'll mint one for free. Yeah. Great idea. Justin had a really high-end party in Scottsdale that was a great night, just food trucks and booze and the whole, it was a great event. You had to show an NFT of his to get in. Each one was a ticket. I had 13 tickets. I could bring 13 guests. That's pretty cool to think about this not as, listen, I shouldn't hold it up in front of the camera. Let's hold up the front side. If you've got the platinum or the black card from American Express, there's the utility of using it every day. But I actually get way more benefits not on what I charge on the card, right? I get all sorts of things. This gives me access to lounges. It gives me access to certain events. Yep. So if you think about it that way, I think to your point, don't, I'm not going to go buy 1,000 NFTs from somebody, but if that NFT has some association with it of a concert or an event or being part of a special Discord group where I can interact with other art investors, by all means, I'm essentially buying a golden ticket that could actually be worth more in the future. Man, that's a membership to a country club that's transferable.
I agree. I think that's 100%. And I think that's something that people miss on it, right? People get stuck on the digital art, right? Like, I could draw this myself, right? And it's not necessarily what it looks like. It's the exclusivity that comes with it, right? So if you have access points, whether it's, Snoop, right? After the Super Bowl, dropped an NFT the Monday after the Super Bowl of, private access to different events, different things that were associated with the different levels of his NFT. And I think the cool part about that is that it gives the power back to the artist as well, right? I think a lot of times the person who's in charge gets disintermediated from it, right? And you think about, Pearl Jam is a perfect example of like a very successful band who was able to maintain their power in ticket sales, right? Because they were bigger than Ticketmaster. Most bands aren't going to be bigger than Ticketmaster or be able to do that. No. But with the NFTs and with the blockchain technology, there's that individual ownership. There's that ability to have that exclusivity. There's the ability to tokenize it and say, at this level, you're going to get X, and at this level, you're going to get Y. And at some point, it just comes down to supply and demand, like we were talking about earlier, right? If there's 100 available and 100 of them are purchased, and number 99 decides he doesn't want it anymore, and there was number 101 that's out there that wants it, and they're willing to pay $1.01 for something that costs $1, okay, well, now we have a market, right? And it's really as simple as that when you get it down to that baseline level. Now, I think where people get lost is, like everything else, there is like that fanaticism and there is that hysteria around it where people think everything can be an NFT, right? Like everything behind me could be an NFT, everything behind you could be an NFT. Like, sure, if you want to turn it into an NFT, that's great, but without the value, there's no point. And it comes down to value. It's like anything else. If there's a market and people assign value to it, well, then it will be valuable. If there's not a market and people don't assign value to it, then it's worthless.
Yeah, and I think you're 100% right. And I think there are virtual assets. I'm a gamer. I got to tell you, I remember back in the day when Skyrim came out, 15 years ago, and you could literally go on eBay and find people that had swords, that had armor, and they're like, "Hey, look, it's $99, and I'm going to meet you at this spot on the map, and I'm going to drop this." And I don't think it was Skyrim, I think it was Warframe. It was one of those, but it became a really big thing, and it became because there was value there. And I think that is what so many people aren't thinking about, is it's truly about what is value. And I think for so long we've identified value as some sort of paper money, but we've also known that things like art and patents and gold and silver now it's actually saying what else has value, and then how do we turn that into, and I do think that Meta coming in here is really helpful too, for those of you who haven't yet done a VR experience inside of Meta. I've been involved in the VR business since 2015, so I've seen the progression of this. But when you get into Meta and you start to understand, I think one of the best apps on Meta right now is Virtual Desktop. If you haven't checked it out, if you have a Meta, it's $15. You literally connect it to your computer, you put the headset on, I build an office in there, and I can make my screens 25-story tall buildings. I can put, instead of 2 screens, I can have 9 screens, and I can have my trading window over here, and I can turn it vertical, and I can change the transparency. I mean, you can see how in the future people will pop a headset on. My wife works for a big tech company in Silicon Valley, and she had a call recently with a developer, and the developer said, "Let me show you my setup." And it was literally a chair and a TV dinner table, and he puts his headset on. Everything's virtual. He does all of his programming, everything virtual. Okay, there's something to that. And I could certainly see if Justin were to sell me NFT versions of my artwork in the background, I might, for my Zoom call, throw one in the background, right? Those are my NFT versions of the real life. So there's application and utility here, but I think you hit such a great point as we start to wrap up here. You hit such a great point about value. What is value, and what is value to you? If Pearl Jam had an NFT collection and holders got backstage access, that would be very, very valuable to a fan of Pearl Jam. Somebody who hates Pearl Jam could care less. If Pearl Jam starts touring less and you want to sell that and that becomes more and more exclusive, well, then the value of that's going to go up. So you just have to think about things, get back to that fundamental of what is value. Yeah,
and I think, and the other part of it too is it gets rid of the counterfeiting, right? There is, when you think about the collectible marketplace forever, like I have a ton of, stuff from when I was younger, Yankees autographs and stuff like that. And they're cool. And I love them. They're authenticated by Steiner Sports or whatever. But, there's a lot of counterfeiting in all of these markets because there is that fanatic approach, right? Like that's fan, right? Is short for fanatic, right? So if you have somebody who's fanatic about, the New York Giants or the Arizona Cardinals or whoever it may be, right? Their mind can be worked a little bit into buying something that's counterfeit. Well, this removes that from the equation, right? You have the blockchain, you have a specific code that is associated to you, you have a chain of command to it went through. And it just allows for it to be a little bit more efficient where historically there's opportunity for counterfeiting. I remember going to concerts, buying a ticket from someone and showing up and giving it to them and being like, sorry, someone already used this ticket.
Yeah, Right.
And you're like,
This one was,
that?
yeah, you're out, right? I mean, that's the cool thing, I think, from artists and athletes and all of the people that can look at things and give those certificates of authenticity. I mean, the fact that luxury brands haven't just completely wildly adopted NFTs yet, just it shocks me. I mean, you're in New Jersey. If you were to go to New York City, do you think you could find me a fake Gucci bag in the next, within 10 minutes of getting out of your car?
Yep. Straight to Canal Street, and I get you as many as you want.
They're everywhere, right?
Yep.
And does that damage that brand? I'm actually watching the Gucci movie right now with Lady Gaga, and there's a lot. I'm at the area about counterfeiting, and it's like they're actually questioning. Well, is it just better for the housewife to be able to just at least feel like she's a Gucci customer?
Interesting.
I don't know. Is it or isn't it? You have to ask yourself that as a brand. You have to again go back to that value and the diminishment of value for counterfeit, and say, should we create a product that has a NFT backing that make sure that this is certified and guaranteed, and maybe the warranty's in there, the ownership, so people couldn't steal it. There's lots of things to think about. And I think if you think about these things as a utility and what has value, if we can boil the whole ocean of this conversation to those two things, the utility and the value are really what matters.
Yeah. And a final point on that from a value standpoint, right? Like, you think about some of the things that luxury brands put their name on and sell for exorbitant amounts of money, right? You think about like a Nike slide flip-flop versus a Gucci slide flip-flop. I don't know the difference in material, but I'm assuming it's pretty similar. And I'm also assuming the price is probably 5X because it says Gucci on it versus Nike.
At least.
Similarly, it's the same thing with an NFT from an artist, right? Like, me drawing a stick figure versus another, real artist drawing a stick figure and creating some exclusivity around it. At the end of the day, it's in the value is in the eye of the beholder. And so if there is exclusivity there and there is value perceived by the buyer, it's really no different than any other market that's out there right now.
Very true. Michael, how can people get a hold of you?
So Mike Durso, I'm trying to think of my, I'm shorehavenwealth.com.
Shorehavenwealth.com. And then I know you're on LinkedIn as well. And I know we communicate a lot through LinkedIn. This is great. Really, thank you so much for being here on the show. And as market conditions improve, let's have you back and let's talk, a little bit more about how, people, I think once this washes out, I think there will be sort of like the .com. There was oh my God, the house is on fire. Everybody run. And then when the flames come down, what's left, people start to look at and say, okay, there's opportunity here. And I think that's what we'll see, hopefully sooner rather than later. But, as the invisible hand of the market has taught us many, many times, she knows how to swat and she knows how to stomp. And we just have to figure out which one of these it is.
I agree 100%. I'm a big believer in only the strong survive. And I think, if it doesn't kill you, it's going to make you stronger. And I think that's going to be the same thing with crypto, right? If, the companies that get through this, the projects that get through this are going to be the ones that have a viable project there. Yeah. And if not, okay, we washed out some of the noise. It's the same thing in all asset classes. We've seen it for thousands of years. It's no different.
Exactly. I mean, the tulips to the Dutch, right? I mean, it goes the whole way back to every economic boom and bust cycle. There's always been winners and losers in the end. And in the end, I think the final closing point here, folks, if you go back to if you know anything about the tulip bulb boom, I think it was the 15 or 1600s or whatever it is, people still grow tulips. It didn't go to zero, right? I mean, it's still out there and people still collect these things. It just happened to be that market conditions at that moment in time got a little bit out of control and the invisible hand of the market made the adjustments. Mike, thank you so much for being on the show. And everybody, I appreciate you tuning into this episode of The Convergence. Until next time.
Thanks for listening to The Convergence. If you want more information about the topics you've heard here today, reach out to us at theconvergencepodcast.com.